moving ahead to our second panel discussion of the day on integrating digitization in NBFCs, opening up new vistas for resilience. Financial services technology is currently in the midst of a profound transformation, and NBFCs, being an integral part of the BFSI sector, are showing significant amount of capability in building new age offerings to connect with the underserved. Let's discuss how our NBFC is embracing digitization with excellence. To join us for this interesting panel, we have Mr. Ajit K. Menon, Head and Chief Operating Officer, Perfectus Capital, who will be moderating this discussion. May I request Mr. Menon to please join us on stage. Ladies and gentlemen, a round of applause for Mr. Ajit K. Menon. Welcome, sir. Thank you so much. Next, we have Mr. Subhash Kelkar, Chief Technology and Digital Officer, ICICI Securities. Ladies and gentlemen, a warm round of applause for Mr. Subhash Kelkar. Thank you so much for joining us here, sir. Mr. Vittal Nayak, Chief Technology Officer, Perfectus Capital. Can we have Mr. Nayak? Ladies and gentlemen, a warm round of applause, please. I'm sure the audience can show a little bit more of enthusiasm for our speakers here. Thank you. Mr. Rishabh Garg, Chief Technology Officer, Ugrow Capital. Can we have Mr. Garg on stage? Thank you so much for joining us today here, sir. Mr. Sameer Mohanty, Chief Transformation Officer, Avance Financial Services. Thank you so much, sir, for being here. Round of applause, please. And Mr. Varun Bhalla, Country Manager, India, Provenir. Thank you so much, Mr. Bhalla, for joining us here today. Thank you. Over to Mr. Ajit K. Menon for taking the discussions forward.
So good afternoon. I think you've been a patient audience, and I take this opportunity to thank the panel. It's an esteemed panel, and we're going to try and hold you captive for about 35 minutes to 40 minutes, right? We're going to make this as engaging as possible for you, and we'll throw it open for a set of questions. So, we'll try and do the best we can. Today, I'm going to begin by making this more conversational rather than being robotic. And we'll make this panel so that you can take away as much as you can and make the most of it, right? Yes, so the point of discussion today would be integrating digitization in NBFCs, opening up new vistas for resilience. I'll throw it open with, there are a couple of discussion points that were broached. I'll throw it open to this panel, beginning with how could NBFCs leverage technology disruptions to empower their business decisions? Now, it's a very broad-based question, and as we all know, we are in the midst of a digital tsunami, and everybody's trying to acclimatize, business models are changing. So I think it's a good starting point for us to figure out where are different organizations across different journeys, right? So let me open this question to Sameer. Sameer, your views on this. How do you think NBFCs are leveraging technology disruptions to empower their business decisions?
Hello. Thank you, Ajit. I think well, there are many technologies which is creating disruptions, and 2-3 ones I can definitely talk about, and the ones that we have tried with and it's given us results. One is definitely in the area of AI. So when we started exploring AI, one thing, and we started doing it during COVID times. So we saw, why not we leverage AI for collections? So we thought, since sales was muted during those days, let's try it for collections. And let me tell you, as we speak today, it was a wonderful decision for us. Our collection efficiency, in fact, as we speak, are even better than pre-COVID times. So the way we leverage AI is to first predict where can our collection guys go and approach the customers, because accessing the customers is also difficult. And what are the behavioral patterns of the customer in terms of understanding, in terms of reading your WhatsApp messages. So that is where I think AI came in, helped us a lot. We ran our self-robo engines where we could collect 15 to 20% on its own. The AI bot could collect on its own, and then the collection team was far more efficient by allocating it better to the guys, and they could approach the customers and collect them. And so I think AI is one area which has definitely created a lot of revolution in the NBFC space. The sales side is yet to be explored. we are using AI in the credit decisioning piece as well, because the industry that we belong to is all about alternate data and AI, because a student, when we fund, there is no bureau imprint. And that's where I think AI, and for us it's far more relevant, that's where I think we are getting into it. The other area probably NBFCs are looking into it is probably robotic process automation. And while you'll always find a challenge, the technology where your requirements will outpace the technology development. So that's where I think RPA can play a major role, and we've used it in a very small way, not bigger way. But I've seen NBFCs really making a great deal of use of robotic process automation. And the last one probably would be around the area of cloud computing. As a strategy, we moved more towards cloud, and all our implementations are happening in cloud. So these three I would rather call it out, which is making a lot of impact to the NBFC space in the way they operate and the kind of efficiency they derive out of it.
So I think those are very pertinent points. I think, Samir, thank you for that response. I think a sub-question to that would be, do you really think, going forward, I mean, if let's say fast forward 60 months from now, do you think there will be a lot of non-linearity of cost to revenue? For example, to get an additional 100 rupees in revenue, would you then need to decouple your costs using technology? Do you really think that's the way forward?
Absolutely. So when I spoke of collections right now, today I'm able to pinpoint a 15 to 20% of population which is giving me 70 to 80% of the bounce. So I know where to work on. I know where the agent should go. Rather than attacking the entire database, we know where to go. So that is definitely bringing in efficiencies as far as the on-ground collections are concerned in the use case of collections. And of course, on underwriting piece also, we do see huge advantage in terms of cloning a customer, understanding, do you have this set of customer in your database? How have they behaved in the past? So you actually clone the customer and say, I can approve him without getting into the other aspect of asking for banking and other things. You can straight away approve the case. So it makes a lot of sense as far as efficiency, and of course, if you're more efficient and if you're able to onboard and turn it around faster, it does have an impact on the business in terms of your AUM that you generate.
I think those are phenomenal insights. Thank you, Samir. Varun, your view on the same?
Ajit, I think where we come from is we look at it from an outside-in view, right? So we get to work with a lot of different NBFCs in different stages. And we see there's a lot of NBFCs at different stages of evolution. There are ways where people have actually been able to extract a lot of additional value by building, say, a single customer view layer. And once you get a customer into your ecosystem, how do I actually map out his journey with me and ensure that I am able to provide him maybe additional loans throughout his life cycle with us, maybe allied products, and to do a lot of that, what NBFCs have been trying to, some of our customers have done really well, is build a data aggregation layer at the back end and combine that with multiple decisioning capabilities which can work both in terms of real time when they're interacting with those customers, as well as go on and take those calls later on in their journey with them and say, I want to today, I think he's been with us 3 years, I think he's at this life stage of cycle, and can we give him additional loan? So definitely this works. And then the second point that I will touch upon is what Samir mentioned from an AI point. And a lot of the customers that we've been working with are now actually starting to use AI across the life cycle. And when I say life cycle, collections has been possibly the first and the most relevant use case, because the AI there came in the form of behavior analysis, in the form of language processing. A lot of the bots started helping out. As the technology and the comfort is coming along with the organizations, a lot of them are actually now moving to the stage of even initial behavior analysis when I am interacting with those customers, or first time reaching out to those customers. And it is a challenge for a lot of people. I think some of the conversations which we were having earlier were around how do we source those kind of technology resources. But with the kind of platforms that are coming in, people are now starting to decouple the need of, or decouple the process of building the AI models or behavior analysis with the actual insight or the data science that is needed, and use the platforms to move on with them.
Sure. So I think that's an interesting view. So I think the reason I asked that sub-question was more to get an outside-in view and an inside-out view. I think you've got both perspectives now, one from the business side and what the other from, a provider of services like Provenir, right? So that's interesting. Thank you for that, Varun. I'll move on. I think, I've heard a bell, so I think I'll try and keep it, more productive. So I think the next step is, what are essentially the steps one is taking as an organization to embrace digital landscapes, essentially the transition from physical to digital, or as you may call it, phygital, right? Which is a combination of physical and digital. Rishabh, your views on that?
Yeah. Hello. Hi, everyone. So, if we want to, as per my experience of past many years, if we really want to achieve real financial inclusion, we want to reach that particular segment who are not yet into the informal scope of financing, we need to have a physical presence. So, as in Ugro Capital, we do have presence across more than 100 cities, locations. We have physical branches over there. We embrace best of both the worlds for physical and digital, basically. Physical presence is required to have confidence of the kind of customer, which is kind of data blank, for which we do not have any credit history in the past. Apart from this, there are people who can assist the customer in their entire loan onboarding journey. And digital presence is required to make the whole process of loan onboarding very efficient. Currently, all our salespeople who are located in all these branches, they are equipped with mobile application. The complete process of loan onboarding can be taken care of on the mobile application itself. In case customers are comfortable, the web link can be sent to customers where they can do and provide their banking information and documents online through web link. Apart from this, we also partnered with various organizations who do have a physical presence and who are deep into the remote locations, and we are integrated with them through APIs, basically. So it's a kind of mix of both physical and digital presence for us.
Interesting, thank you.
Yeah. So we had, apart from this, on the customer servicing front, we had built a kind of omni-channel kind of interface for the customers. Customers can, for any loan account information, customers can walk into the branch, they can utilize the WhatsApp bot service, and they can visit a web portal, basically. So all the channels are open for the customer, be it physical or digital, to get the loan serviced. So that's the way I feel that it's the way going forward, that we need to have a phygital presence just to achieve the true financial inclusion in place, right?
Okay, so Rishabh, I think, do you really think the proportion of the phygital to the ratio, right, the phygital to digital, you think it's more pronounced on the digital side and less on the physical side?
I won't say, because we recently launched our digital direct-to-customer digital application. Still, it's a pure digital application where a customer can do the complete onboarding on their own. Even though it's a digital application, even we had seen in more than 70% of the cases, it's primarily contact center assisted.
All right.
So loan is a complex product. So there are a lot of people are not well educated about the financial documents and the requirements. So there should be someone who can assist them at the back end. So therefore I say pure digital process for a segment we are working into right now in SME financing space is still a long way to go.
Right. Well, that's an interesting view, because there are bottlenecks which we could expand later, but I think I completely echo your thoughts. Thank you. I think I'll move to Subhash. Subhash, I think the question is more around data, about edge on the edge computing, moving to the transformation to cloud, moving data to cloud so that it's all faster available. How do you really think, as a financial services professional, how do you really think resilience matters, right? Do you really think with all this transformation happening, these are not physical anymore? The transition has already happened, or it's a change that's already happening very rapidly. How important do you really think is resilience?
I think resilience is extremely important. One is because our customers mainly are on the digital platforms. So they are either on mobile or they are either on their websites. And all of their transactions need to be carried out in real time and as quickly as possible. So they would expect the platform to be alive and kicking and performant and scalable and reliable from the day they log in to the day they log out. And it is a hygiene factor for us. It is a given thing for us. But at the same time, we have to think about DR. We have to think about scalability. and all those redundancies at times. We have to think about availability zones instead of just saying that we are on cloud, because sometimes cloud also doesn't work, right? Like we had an instance some days back. So we have to be prepared for availability zones, putting different applications in different places. We will have to be flexible, we will have to be responsive, and we cannot just depend on one thing. We'll have to have plan A, plan B, plan C. And are you ready? And do you have capabilities to run your production from DR? Instead of just, and don't have a DR for the sake of it, tick in the box, fully functional DR. And a lot of these requires a serious investment of time, money, and commitment from technology teams, business teams, to make sure things are working. And what we have done as a company is our DR runs from production and nobody knows it. You know, I take pride in saying that. Nobody knows it. We don't even announce it, right? We try to make sure that we have these low impact alternate isolation zones available for certain sets of customers if there is a problem. And we know, a lot of you would have heard about cyber attacks of late. And all of these things matter when the actual situation arises. And how can you isolate a particular thing from the other? How can you isolate what happens if this happens? So scenario-based playbooks is very important in case of resilience. And I mean, it's a multi-pronged thing. You cannot, I can keep on talking about it.
Yeah, of course.
Yeah.
Yeah, I think that's an interesting view because I think there is no one-size-fits-all approach, and every scenario is different, and it plays out very differently, right? So hence, having agile teams, you may not necessarily have a playbook, but maybe add one more to the playbook, right? Because every situation is heterogeneous. So thanks for that view, right? I'll move on to Vittal on adoption of new technologies generally in the financial services space. What do you think are the impediments for adoption, essentially in the financial services space, especially from a technology perspective? So your views would be valuable.
Sure. Thank you, Ajit. I represent a company called Perfectus Capital. We are in SME financing, right, in operation for the last 4 years. I think the key here, I want to talk about technology first, and then we'll talk about the adoption, right? In our case, I think the richness of the data is very important, and the transaction experience and the richness of the data. So when we evaluate a SME, right, for giving a loan, we collect bunch of data, bunch of documents, and all these documents about financial statements, bureau records, banking history, GST records, property documents, or other collateral documents. So how basically efficiently you extract all the data so the credit guys can take a fast and efficient decision and the right decision, that's very key, right? And during this entire process of onboarding, since you have to actually collect this bunch of documents, go and see the customer, go and see the property, go and see the plant machinery, there is a lot of this back and forth happening, right? So even if you put a digital enabler in place, right, there are still friction points, right? So one of the challenge is actually the change management, right? What happens, especially in the B2B loans, right? People are used to either a channel partner or even the relationship manager is used to getting a bunch of files or a thick files, right? And just getting that files in the office and then dump it on maybe a kind of sales operations desk, and that guy is then actually trying to figure out and put that data, right? And if you digitize that at the source, right, a lot of data capture has to happen. And there you find a lot of issues, right? That's some of the challenges where if you enable your sales force by giving a tab, by mobile app, still capturing all that data, right? That's some of the challenges actually, right? So that is a key. We want to kind of improve the transaction experience from a digital solution perspective. There are a lot of solutions are available, right? I mean, my panel members, I mean, the peers talked about the various technologies which are available. But the key here is how do you define the solution, right? The enablers are available from a customer onboarding, document gathering, cloud, data analytics. So the entire ecosystem of technology is there, right? How do you actually figure out those friction points and addressing those friction points? That's the key. And that's not actually one-time solution. You just can't put a solution and you assume that it will kind of work or something, right? So this continuous refinement of that solution, identifying the friction points and kind of bridging those gaps is important, yeah.
So Vittal, I think that's an interesting view because every asset class has a different challenge.
Yeah, yeah.
And every underwriting is different to a different asset class, right?
Right.
And then there are associated challenges.
Yeah.
So I think that's a very interesting view. Thank you for that. And I'll pose this to Samir again, right? So Samir, how do you think organizations can cope with the next wave of disruption, right? Now, essentially NBFCs are also known as shadow banks. Then you have, newer platforms or newer innovations like the account aggregator framework. You already mentioned about digital collections. How do you really think this landscape will change in the next 36 months to 60 months?
Yeah, so the way I would like to answer is first we have to take an internal view, okay? And some of the things we have attempted doing is, and primarily the reason I moved into this role, I was telling someone 3 months back, is there was a need to integrate all of it. Customer experience, how do you collect data and use it for your insight? How do you want technology to leverage it? And the third thing is what kind of changes you're going to do to the process. All these 4 components will actually look at transforming the entire landscape. And I think the first thing organization need to do is internally revisit your structures, whether you're ready to embrace the kind of challenges that you want to see. Even if, take for example, account aggregator. Now, if you tell me there are multiple use cases in account aggregation, right from onboarding to collections also. Now, you need to have your internal structures ready to be able to appreciate and try 1 or 2 use cases. So basically, I'm trying to tell you, you need to have a team, you need to have a mindset where you allocate a budget and say, hey, this is 100 rupees of budget, 5 rupees I will keep on trying new technologies and see whether I'm successful or I'm failing. The other piece is you put up your use cases, take it through a closure and see what kind of success metrics it is deriving. I think from a embracing standpoint, there are many technologies will keep on coming. You need to have an internal structure to do it. Third thing, the second most important thing is you need to have in your own mindset that I will keep on allocating resources to be able to trying out new technologies. That is the second thing. And the third thing is most importantly is a top-down approach on some of these technologies which are coming. Because you will have change management issues, Vittal rightly pointed out. So these 3 to me are the topmost things that the organization need to internally align when they embrace any technology. There are many technologies that will come and we need to try them out, and then the mindset should be there to try them out.
I think Samir, interesting answer, because I don't think there is a single playbook or a one size fits. It can't be a cookie cutter approach.
Yes.
Right? It has to be a model which is bespoke. Right?
Probably the last one I would say is, and that's out of my and our experience, is you should be ready for a build or buy approach. Because skill sets are going to be a challenge going ahead as new and new technologies comes into play. You need to be ready. Sometimes we get stuck, boss, isko in-house se karna. We want to in-house this, but need not be the case always. So you need to have a build and buy approach also when you get across this technology.
Right, so essentially a hybrid model going forward,
absolutely,
which works best and gives you the maximum bang for the buck.
Absolutely.
Right. I'll come back to Varun. An interesting question on decision analytics, insights. How do you think? See, Varun, as somebody who's representing that industry and somebody who's spent a significant amount of time with one of the credit bureaus in a similar role. Now you're on the other side of the fence, right? And when you have a view from your end, and when you see all the financial services companies essentially playing in the same space, how important do you think, or rather how underpenetrated do you think is the space? And what do you think are the next top 3 things that you would focus on, maybe in the next 36 months?
Very interesting point, Ajit. So let me break this down into 2-3 pieces from a penetration point first, right? So we work with a lot of players across the NBFC space. I think NBFC is one of the most one of the sectors in the industry which is the most innovative. And everything is in NBFC. Whether you talk of today fintechs, thanks to RBI, whether you talk of people who are coming in from different directions, eventually land up to be an NBFC, whether it's a secured asset product, unsecured asset product, or a completely different BNPL kind of players, right? And organizations across the scale are at different stages of maturity, both in terms of ability to adopt technology and the way that they are today leveraging that technology in both data, insight, or credit decisioning processes. Right? And specifically, when we look at where I look at from my experience, and I see some of the organizations which have probably done the best are the ones where there is a culture and a mindset. I think two people here pointed out on the panel in terms of how to go about adopting new technologies and how best they do it, is where the culture and mindset is driven from internal or inside regarding being open to new technologies and regarding adopting those processes. And while that was not, and in the NBFC space, while that was not the case for a long time, it has it has changed very fast over the last 2 years during COVID. So that has moved really, really fast. But at the same time, there is a lot of struggle in these NBFCs in terms of what data to leverage, how do we leverage, where do we put this data, and how do I use it at the time or at the point that I need it. And all of these are primarily because different things, or people have put in different parts at different points of time. So there's no real sitting down and in most cases, actually, it's a job. It's something which is the need of the business at that point of time. So it happens as and when the problem arises, rather than a complete roadmap plan of saying how do we go around building a complete structure around that space. And the second thing also comes is that we talk about data, right? And data today is becoming really critical of various kinds, whether we talk of the bureau, which was the traditional set, but from an alternate data perspective, which is coming in from your mobile side, or from psychometric data, or behavior data, or thanks to account aggregator, bank statement data, and the various kinds of things that now account aggregator is enabling, both from mutual funds and insurance and everything else, right? And all of this data is not really limited to one use case. It can be used across the customer life cycle. So at a NBFC level, people who are becoming successful are the ones who are thinking through and saying, let me plan my architecture in a way that I am able to build a data layer at a different side. I am able to build a technology layer at a different side, or an application layer at a different side, so that I'm able to use this data across the different parts of the customer engagement that I'm going through. And I think this space is big. I think we've just started scratching the surface around there. Pure play decisioning, people have been used to running rules to an extent, but the adoption of deep technologies, adoption of ML kind of algorithms is just starting in most places. And as the scale the engagement moves to digital, which basically makes it more real time from a customer perspective, the adoption of this technology is just going to increase to that extent, because the level of both the speed of decision making that you need and the level of insight that you can actually generate in a fraction of a second is going to be a very critical differentiating factor for the ones who become successful. And over a period of time, I think that will just become hygiene, say 3 years down the line or 2 years down the line.
That's an extremely interesting view, Varun, and I think in my view, the FMCG moment for NBFCs have arrived. The ticket sizes have dropped 4x, ROIs have climbed, right? So now you get loans up to 5,000, maybe 1,500 rupees, and the ticket sizes were, let's say, 2.5 lakh rupees, right? So there's been a significant democratization of reach, inclusion, just because today there is a technology stack available to underwrite somebody on alternate data. So that's an extremely interesting viewpoint, right? Thank you, right? I think I'll pose this to Subhash, right? Subhash, how do you think technology can support product innovation, from the industry that you come in, right? You're essentially, from the financial services space. how do you think product innovation can support the next phase of growth?
I think that's a very interesting question. First of all, thank you. The technology changes the way we do business. It is very important. For example, I'll give you an example of Algo platform that we are building on our platform. So we are democratizing the smart strategies for our customers who don't have any knowledge. And as a responsible broker, we want to go ahead and offer those services technologically to our customers. So that is innovation.
Yeah.
That is a product innovation. And we have research which is very award-winning research. But how do we enable our customers to get the research offering? How we make it palatable?
Yeah.
How we make it customer reachable? So can we offer it on the mobile? Can he go for a coffee break, and in that
Still
coffee
come back
break,
with journey, yeah.
can he invest and then fill it, forget it, and then make money? And third important aspect is, how do we think in the interest of customer making money?
Right.
Or technology can be used in multiple ways. For example, if you today sell shares and there is an dividend coming up, it will give you a warning. Do you really want to sell it today? Can you defer it by another 10 days?
So that's your analytics.
Yeah, that's analytics, and that's technology enabling you to work in the interest of the customer. So that's a different point altogether.
Right.
And technology is enabling, and customer will feel that I am in a trusted hand. I am in the right place. So if there is your tax structure is changing from short term to long term, then you allow customer to do that. So those kind of things. So technology can really change the way you do business. And there are myriads of applications. For example, today, in another week's time, we will introduce a flash trade on our mobile. That's a visual experience. So you are on the chart, you are visually getting there, and you are given a feedback every second. And you are also shown the transparency, your profits, the money that you are going to make, and you can take a decision. So transparency, visual appeal, and decision making in the hands of the customer. So whenever he wants it, he can square off. Can you build those different models altogether? And technology will enable that for you. And these days, technology is enabling that for you. So that's really the answer.
Well, I think that's a phenomenal view, Subhash. I think that's really going to flatten a lot of structures, isn't it? Because that's going to take out a lot of lacunae. It gives you instant ability to make decisions, etc. So that's really, really interesting, right? Thank you. And I'll pose the same question to Vittal. How do you really think this is going to essentially take shape with NBFCs, right?
You're talking about product innovation, right?
That's correct.
Okay. So NBFC is actually straightforward business, right? Most of the people are business experts here, right? You give money and then you get the money back with the interest, right? And you obviously prevent fraud and kind of assess the ability of this person, how he's going to repay, right? That's important. So with the technology proliferation and the new business models coming in place, right? There are various ways the data is getting generated, right? So if you look at the merchants where the digital payments, right, are gone up, then can you kind of make a product, and the products are already there, right? Around the POS, based on the POS, can you kind of POS transaction, can you give loans to some of these merchants, right? There are e-commerce platforms, then there are aggregator platforms, right? So because of the digital wave, right, these new business models are in place. Now I think NBFC's role is to figure out how do we actually construct a product, right, where it could be sector focused, it could be business focused, essentially tapping on that data and then making sure that you use that data in a way where you kind of assess the capability of the business or a person to get your money would kind of come back or something, right? That essentially is, right? There are so many products, there are so many fintechs, right, now playing in this space. Yeah.
Thanks, Vittal. I think that really helps, right? And the final one, Ghost, there's one more question left, right? This, and I want to get a view from Rishabh, right? Rishabh, do you think when you pivot to, let's say, informal lending, from the current state, which is not necessarily informal, right? What sort of guardrails will you look at, right? Do you really think, stack would need to change? Would you need to have, a completely different setup? So let's say tomorrow if you were to pivot from product X to product Y, what would potentially, be needed?
If we move from formal lending to informal lending, as what I just explained in my previous question, basically. So it's a physical kind of a model would come into play, basically. So we cannot rely on the bureau score, banking, GST. So if you talk about the people who are not in the formal scope right now, so that data points would change completely. So we need a person who can visit the customer premise. He used to see what kind of business person is doing, how many footfalls are there in their kirana store, basically, per day. Where his kirana store is located? Is it located in a place where doing business makes sense? Are there other stores in the vicinity? So all these data points needs to be collected manually. So the kind of data we used to collect change drastically, basically. So, and this data goes into underwriting. So approach changes drastically for if we go for an informal kind of lending. Apart from this, typically, if I talk about traditionally, we used to do collateral-based loans. Now the paradigm changes. Now we just look into through GST returns, we look into the cash flows, basically, of the business. So now we are pretty much clear how the cash flows are faring, how the business is growing from just by looking into the cash flows of the business. Then this plays a very important data point for us for underwriting and deciding upon the eligibility of the customer.
Perfect. Thank you. I think, thanks for those interesting views. I think the panel has been a great panel, and a very extremely curated panel by the Elets team. So thank you for that. I've covered, I think I've done justice to the set of questions, and I think I've made it a little well-rounded for the audience to take away as much as you can. So I really appreciate the time. Thank you, for being a wonderful audience, and thank you for the esteemed panel. Thank you.
Am I audible? Yeah, thank you. May I request Dr. Ravi Gupta, if he's around. Can I have Dr. Ravi Gupta here, please? And in the meanwhile, if we have any audience questions.
I was about to say that.
Please. Can we have the mic here?
I think we have about a minute and a half, so maybe we can squeeze in some. Yeah.
Yeah, morning to everyone, and thanks for this, very detailed discussion. My question, sir, is today all these technology companies look at businesses, and there is a exploding technology solutions to all. However, do you think India is ready with the privacy and data security aspect? Because that was not discussed in the panel. And are we ready for this? So many technology innovations coming in. Okay, what about data breach? Recently, the data protection bill has come in, which imposes large penalties. And there is not enough clarity, though technology is running ahead of where regulations are. I just wanted the panel's view on this, and how do we, address this? I mean, our Indian regulations or even the legal process, is it in line with, what technology is doing?
Yeah, I think you'll need a technology view, so I'll open it to the panel. Feel free. I think Subhash or, yeah.
I think this is a very interesting topic. I touched upon it as a cybersecurity. We need to be completely aware of, it's a very different ball game altogether when the data leaks in public or in the dark web. And there have been instances in the recent past, where some of the government bodies have also been attacked. And it's very unfortunate. But, I think we are not there yet, to be honest. We need to be pulling our socks and devoting a lot of money, time, effort, attention, and senior management and even the board attention to cybersecurity. That's a very important aspect. Second thing is you need to approach it in a very structured manner. I mean, you employ some ethical hackers to attack from outside. You get some talent inside the thing. You apply tools. You measure yourself from outside with some third-party products. You go red teaming exercises. You do audits. You do secured coding. So there is no one answer to it, and there have been certain lacunae architecturally. Windows released 52 one-day, zero-day, patches in the October release itself. 52, so late in the cycle. But, and you are vulnerable. I mean, you cannot patch all your servers within 48 hours, right? So there are realities of life and, but more and more I see the people who I meet are aware of cybersecurity risk, are aware of the data leakages, are aware of human firewalls, sort of a thing that most of the breaches happen because people click some link on the email. So how do we educate our employees, our stakeholders, everybody? So it's I see there is a lot of awareness in the Indian community. And a lot of boards are also paying attention to this specifically, and it will evolve over a period of next few months to few years, I think.
Thank you, sir.
Thank you so much. Yes, sir.
Do you have time for any more questions? Yeah, I think we're done.
Yeah, we're done.
Okay, thank you.
Thank you. So may I request Dr. Ravi Gupta to please join us on stage to present a small token of appreciation and also present the Banking and Finance Post magazines to our esteemed guests here. The Banking and Finance Post that has been capturing innovations in the BFSI sector. It's India's first magazine on ICT innovations in the BFSI sector. May I request Dr. Gupta to please present the magazine to our esteemed gathering here. May I request sir to present this to Mr. Ajit K. Menon, Head and Chief Operations Officer, Vivriti Capital. Thank you so much, sir. Thank you for being here with us. To Mr. Subhash Kelkar, Chief Technology and Digital Officer, ICICI. Technology Officer, Ugro Capital. Thank you so much, sir. Mr. Sameer Mohanty, Chief Transformation Officer, Avance Financial Services. To Mr. Varun Bhalla, Country Manager, India, Provenir. And also present the mementos. We'll begin with Mr. Varun Bhalla itself, since he is there on stage, sir. You can present a small token of appreciation. To Mr. Sameer Mohanty, Chief Transformation Officer, Avance Financial Services. Mr. Rishabh Garg, Chief Technology Officer, Ugro Capital. Mr. Vittal Naik, Chief Technology Officer, Perfectus Capital. Mr. Subhash Kelkar, Chief Technology and Digital Officer, ICICI Securities. Mr. Ajit K. Menon, Head and Chief Operations Officer, Vivriti Capital. And I'll request the panel to please step forward for a group photograph. And may I request the audience to please give a huge round of applause to our panelists here.